Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, and regulatory landscape and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Dr. Merav Ozair, global leading emerging technologies expert, Jeff Mahony, co-founder and chief architect of RYT, and Charles Nader, president, CEO, and chairman of Doc.com, and we're here to discuss the intersection of digital assets, financial and healthcare inclusion, and regulatory frameworks, and why emerging technologies can also help to prioritize accessibility and sustainability. It is great to have everyone with us. I'm excited for this panel because we're not just going to be focusing on financial services, we're going to bring the healthcare angle in as well. And you know, Charles, we're talking about all of these technologies like AI as an example, and you really do need that framework to be able to support it so we can have the next conversation around accessibility and democratizing access to all sorts of industries.
Definitely. AI is a huge differentiator for our services in healthcare at Doc.com, but it's really the combination of AI, blockchain, and humans in this case that can create a solution that really changes the world. As far as free healthcare, I think it's a possibility because of AI.
Yeah.
We have that. This can be a whole different world for generations to come.
Well, I mean, certainly can, and because of the, one of the features of blockchain is to create that transparency and accountability and make something such as healthcare or financial services, for that matter too, more efficient.
Mm-hmm. It's virtually any area, but if we start with health services, you're really talking about data challenges. How do I actually bring this data into a place where it's all centralized, but yet the people that are out there who need access to it actually have that access? Then once you have that, you can layer your AI engines on top of this, your machine learning, you can start to create some real outcomes that are something much more robust than what a human being could possibly do at that time. You still need the human being really kind of as an overlay to make sure that what's happening in that space is actually happening accurately. But as you train those models based on that interaction with that human, you're going to start to see something that gets closer and closer to the approach of an actual across-the-desk interaction between a doctor and a patient. Once you achieve that, you're in a whole nother realm of possibilities. But you need that underlying data in a centralized location, but ensured that there's a transparency part of it, ensured that there's an actual point where others can touch it who need to touch it, because it's not just a closed system. It's not just that doctor, that patient. There are a lot of peripheral, or edges we like to call it, that are involved in that, and they need access to that data.
And Merav, this is something that you and I talk about every month when you're on the show. The biggest aspect is it comes down to security, and it comes back to the responsible and ethical use of these emerging technologies.
Exactly. So, and we talked about it many times, and that my thing that I advocate for is the use of blockchain for responsible AI, because blockchain is everything that AI is not, in a sense, because every technology is not perfect. Every technology has its weaknesses and strength, and the strength of blockchain is somewhat the weakness of AI, which we say it's a black box, and it's not as transparent and everything. And that's what the strength of blockchain, which is transparency and traceability and immutability, and all of those things that we are lacking with AI, and we need that. And that is where the responsible AI, blockchain can help with the responsible AI and all the ethical and privacy that we're talking about. It also, in terms of the security and the privacy that you mentioned, if someone would like to, not show all the information or share some of the information, especially when we're talking about healthcare, they don't need to know all my personal information. They need to know maybe some information about my health and issues that the doctors need to know in order to assess my situation. But then maybe there are other things that they don't need to know, so there's no need to reveal everything from Social Security, etc. And so blockchain can help with that, something that AI cannot. So this integration, I think that in fact you've been to the CES conference, right? And Jensen, I think his last name is Huang. I hope I'm not butchering. Yeah, CEO. And he talked the next trend will be robotics. So if we're talking about robotics, which probably will be in finance and healthcare and everything else, then how are you going to secure all of that? How are you going to monitor it? And when it comes to transactions and everything else, this is where blockchain can help. That's a responsible AI that we're talking about.
And Charles, I wanted to get into that. What is unique about blockchain that's able to deliver all of this? Because when you're talking about transactions, transparency, and security, whether you're talking about a supply chain, healthcare, or financial services, it seems to come back to what blockchain can provide.
There's two main things, and it's pretty simple. The first thing is, with blockchain, you can hash a transaction of data, and that provides a transparency. The second part is you can also do tracing, blockchain tracing. For example, pharmaceuticals. There's a lot of, globally, there's an issue with pharmaceuticals. There's a lot of fake Viagra and things like that out there. You can trace from the production to the distributor to the pharmacy, all with a blockchain hash, and that's sounds like a simple thing, but it is a very valuable thing for the pharmaceutical industry. But really, in the case of data, when there's a data capture, for example, in our case, from a patient, we capture their data, we can hash that, put that on the blockchain, provide transparency, and say, well, the next point from where this data is going to, or if it goes out to any third party, there's another hash for that. At least the patient has transparency as to how their data is being used. The ultimate solution for that would be a decentralized data storage, but that's still, we're working on creating that. I know others are as well. It's really a combination of these blockchain tools with AI that make the huge difference in how we do our work. But it's just each technology has its virtues. Blockchain has its limits as well.
Jeff, what has been the roadblock for mainstream adoption?
I think the roadblock is always the edges. There's a transition period between when you're at today's state and the utopia. Right? Somewhere in the middle is time. I like to liken it to a dating app. If you only have two people on this dating app, there's no reason to be on that dating app. You can't date. Okay, so somehow you have to bridge that gap between the now and the utopia. How do I have hundreds of thousands of people on that dating app so I can make that work? How do I have hundreds of thousands of units of information across a broad spectrum of companies who have access to this to make this ecosystem of healthcare work? I can't do that one small portion at a time. I have to do this all at once. So decentralization is a topic that you brought up. And that's the challenge with most layer one blockchains at the moment. When you're looking at Bitcoin or Ethereum or any other versions of those, they all have a fallacy in which they have to create some kind of side chain or some layer 2 or some layer 3 piece in order to fix what is at the core. Why not just create one that has everything at the core, that's already distributed, that uses a consensus model, for instance, that will actually democratize that, and so you can get an entire network up and running that is decentralized, that does have the same understanding of the information at a correct level that you're talking about, particularly with healthcare data sets involved in that. So unfortunately, you need a new layer one blockchain out into the market space. You can't do things like what Google is doing with Bitcoin and trying to sort of shoehorn it into this. The requirements that came out in 2009 were spot on. So far, no blockchain has created a solution that meets all those requirements. That's the biggest challenge, is we keep using this word blockchain with the assumption that they've met those requirements. They haven't.
Right. So, Merav, is there a distinction between, we keep talking about how interoperability is improving. Well, it doesn't necessarily sound, it still sounds like there's some silos there.
I mean, even if you think about the blockchain as is today, it is silo-based. I mean, you can't hop from blockchain, Bitcoin to Ethereum to Avalanche, and you can't hop from one to another. If you have a Bitcoin, that Bitcoin cannot, transact on Ethereum and vice versa and any other of them. So you have to create those layer 2, 3, 4, and whatever in order to be able to create those, marketplace, so to speak, that the Bitcoin can be translated to Ethereum and so on. So there's no interoperability. The way it was created, it was very much in a silo. the idea when it was launched, and then Ethereum was launched, etc. Every one of them thought, like what's happening right now. I don't want to go to politics. Is like we are going to reign supreme. There's going to be only one Bitcoin and only Bitcoin. And then Ethereum came and said it's going to be only Ethereum, just Ethereum. So if you have this concept that it's only going to be one, then you're not thinking about interoperability. Right. Why would you? I mean, you think about, okay, that's me. Everyone is going to, come to me.
I'm the winner.
I'm the winner. And they're not thinking that, but we know it's not going to happen. I mean, there's not going to be just one. So we have to think about interoperability.
So, but Charles, isn't that kind of the issue when we think about healthcare and TradFi as an example, where you have this proliferation of exchanges as an example? Isn't that the whole point of introducing blockchain technology, to remove some of those complexities?
Blockchain technology has the power of automating a lot of the things that we see in the finance space. The real issue that I see is there's two things. One is the decentralized aspect. It's easy to say decentralized, but for example, Solana or Ethereum just recently, they are going back and canceling out a hack. That means it's really centralized. That means that they actually have control. Someone, the Ethereum Foundation, can just say, oh no, stop the blockchain, we're going to go back. The only one that's truly decentralized is Bitcoin. So if you really want one of the true virtues of blockchain, it should be like that, should be decentralized. Applying the technology in other ways, for example, in healthcare, like what we do, it is a problem yet to be solved, which is that taking advantage of the virtue of decentralization, making that's where the value would really transfer to people. If they are participants in a world where they have access to their data, it's in a decentralized storage system, and no one person or one organization controls it all. But that doesn't exist yet. Yeah. Bitcoin, I guess Bitcoin would be the only one that's truly decentralized.
Bitcoin, I think that everyone is saying, and I agree with that. It's the most secure one, that's for sure. Yeah. Most decentralized one, most secure one that we know as of now. But the problem is the other problem that we have, the scalability issue and the computation and all of that. So that's the problem with Bitcoin. This is why you have to create the layer 2, etc., in order to make it more scalable. Yeah, exactly. Yeah, so I think that when Bitcoin was launched, it was some kind of an experiment. I mean, let's see if this concept of decentralization can work. And the pilot, the experiment, proved us that yes, it can work, but it's not perfect. Right. We need to make adjustments. So now all the other evolutions of other blockchains are trying to make those adjustments.
Right. Well, I mean, Rome wasn't built in a day. You have to exercise some sort of patience. Or make your point, Jeff, and I have a question for you.
You have to accommodate the edges, and that's real world for us. Banks, for example, to process a worldwide transaction for Visa is 2,700 transactions a second minimum for a worldwide network. There is no current blockchain on the market that can do that. You're talking about Bitcoin, you're talking about 3 or 4.
That's a scalability problem.
That's your scalability issue in a nutshell. It's an educational pilot that worked out well to prove conceptually that this could be done, but that is not the end game here. There has to be an accommodation of actual real-world edges and the requirements that those edges have. Banks, even for the unbanked, you still have money stored somewhere. Even for an unbanked population, it's got to be stored somewhere. That means that those blockchains have to interoperate with the banking systems, whether we like it or not, whether that's the utopia that we're chasing or not, they have to. They cannot do that at 4 transactions a second, or 27 transactions a second for Ethereum, or 1,500 transactions a second for XRP or Solana. It is not fast enough to do this. They may be accommodating attack vectoring and all the other things that are accommodated, but they're not at a point where the edges can utilize them. So you have no interoperability with a real utility for a person in their actual normal behavior patterns.
So here's an existential question. I feel like these words tend to get thrown around a lot when we think about accessibility, sustainability, democratization, particularly when we're talking about emerging technologies such as the digital asset and blockchain space. I don't know. I'm kind of not feeling that 100% based on this conversation.
It's not there. It's not ready yet, right? There's, again, where we're at today and a utopia of where we want to be. And somewhere in the middle is where we exist today. And it doesn't accommodate the edges. It doesn't accommodate what is that transition period. It doesn't matter what vertical you're operating in. When you're going from new to disruptive technologies, it's never a replacement. There has to be some growth between those two. The state we're in and the utopia we want to be. Blockchains today are not focused on that. They're not accommodating that. They are not anticipating the health equities of the world who control most of today's delivery of medicine, as opposed to just the diagnostic side of it. Who's delivering this, right? No one's including them. That's an edge. When we're talking about value that is moving, and it may be between unbanked, say it's in a money remittance solution or something along those lines, where we're trying to bring the underserved or unserved in. If you don't accommodate the banks, where's the value being stored? At some point, you have to offload this into a fiat world, simply because most of the services that that person needs are in the fiat world. Until you get everything transitioned into a currency, digital currency world, you must accommodate that, and none of the blockchains
And I think it's coming.
that.
I think it will come.
Right.
The reason why I think it will come is like if we are moving to the agentic economy and the robotics and everything is autonomous, the idea of fiat and banks, that will kind of fade away, and then we'll have to accommodate, because those agents that will, work on our behalf, and I think that there's now a Chinese company, Manos. I mean, you should look into that. They now have this agent stuff, and they say that it does everything for you.
You don't need apps anymore.
Yeah, exactly. I don't know. You should check it out. It's pretty interesting. So when we go to that, if that happens, and everyone is saying that it's going to happen, then I think fiat will no longer exist, or cannot exist in the way that it is existing today.
Right. Well, I mean, Charles, I think it would be naive to not expect a transition period. Oh, by the way, once we get to the end goal, to think that it won't evolve again.
Right.
It's constantly evolving, and you can see how the blockchain space has evolved in the last 3 years even. I mean, it's just incredible. There's, for example, layer 2s that are being built on top of Bitcoin now, which is, you would have thought, well, it's how do you use it, how do you do that? But there's people working on that, ordinals, things like that. It's exciting because of that, but it's definitely, I would be bullish on blockchain in general, just because it's probably one of the most unique innovations in human history. And yes, it has its limitations, scalability and decentralization, true decentralization, but this transition is happening because people see the value in having something that you can fully trust.
Yeah.
That's such a beautiful thing about
And
it.
I mean, it's almost like, let's not recycle. I'm only one person.
Exactly.
Like, why don't stop trying to innovate. Because
Always be innovating, even if you're walking down the wrong road for a little while. But it's that trust that's the real issue. I had this conversation the other day with someone. I said, when your bank account is off, and you know it is, and you call up the bank, and that bank says, bummer, I think we're correct, you have no recourse.
Right.
And the reason that a blockchain exists as its primary function, besides the immutability, is the transparency that says, oh, I have 10,000 other people who think you're wrong too, bank. I'd like my money back now.
Yeah, it's
And
not
that
just the bank, it's all
transparency is
companies.
only, it is not in a Microsoft SQL Server or a Sybase or an Oracle or anything like that. It's only in the blockchain. So the direction that Charles was speaking about is exactly right. It will evolve in this direction. We are in our infancy, even though since 2009 we've been operating. It's taken a little time to get out of this nascency that we have and create something that is real world, because before it's primarily been academic, as you were talking about. And it's proven itself out. We found the kinks. We know where some of these things are. We don't have solutions for all of it, but we're on our way to create those solutions, because we need that trust back in our systems. We need to be able to say, no, bank, I don't believe you, and I got a lot of friends who don't believe you either.
Yeah.
I would like my money.
And that
So,
goes
Merav, you
back.
have 30 seconds, final thoughts.
That goes back, to the agentic economy, and we're talking about responsible AI and the trust. AI cannot be trusted, and everyone, and that's going to revolutionize everything. But AI cannot really go to as far as all what everyone is predicting without the support of blockchain, which is going to bring the trust that we need in order to sustain all of these innovations that are going to come with AI.
There's
best
no
combination.
one magic solution. All right, guys. Appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.